All right, are we live? Come on. Nice. We are live, boys. So I'm going to use the restroom real quick. We're going to get our earnings in here. And, yeah, give me a moment. We're going to go over the earnings. So get ready. Get ready. Let me go pee real quick. Casey, tell everybody to like the video, man. Everybody in here, you guys got to like it. Everybody, let's go. Get it. Let's go. Remind everybody. Let me go pee real quick. Scoop. Scoop. What's up, baby? On the first one. What did Trump do? Goddamn. You guys got in here quick. Y'all got here. Uh-oh. What up but the stock then? Okay. Let's take it easy here. Let's take it easy. Let's get up to Netflix. Let's talk about this. Okay. Look at that. We got a fucking double. Well, we got earnings, man. We got earnings, but you guys are going off on each other already. Let's go. What is it? They got increased subscribers, numbers. Oh, man. This is good. You shorted before? Uh-oh. Uh-oh. How many shorts we got in there? The trade news prior to Netflix earning was a way of insulting markets to miss. Oh, I don't know, man. Someone posted. Did you read the comment, Oliver? You would like the. I think you posted a good comment on the video, and somebody else who posted a comment on the latest video I just posted. I was like, damn, some pretty good points. I know you talked about the fake news around this time with China, but I think there's a lot, man. So we have the conference call in 3 minutes. I'm going to throw that on once we get that up here. But yeah. So we'll listen to their conference call. We'll hear what it's going to be a pre-recording when it comes out. So we're going to listen to that, and then we'll just see how it goes. And then I'll explain the earnings. We could talk about it, have a little discussion afterwards of what we think is going to happen here. No, they haven't had the conference call yet. The conference call is about to start. That's why I have this on. The conference call is going to start in 2 minutes. In 2 minutes supposedly. We'll see. Let me see. Let me pull it up. Netflix earnings. Where is it? I'll get it. You're gonna pull it up. Yeah, I'm gonna play it. If you want, I'll get you guys the link. Here's how it works. Here's how you guys could do it. Give me a second. Let me get you Netflix IR. If you look up Netflix Investor Relations, it comes up. So here's what I'm going to do. I'm going to post it for you guys. You could do, when it starts, that's where they're going to post it. It's going to be a pre-recorded video. So they're going to have a pre-recorded video, a 30-minute call, and they upload it in the next 1 minute. 60 seconds, they should upload it. Hold on, new body style. I was trying to get a card today and I got cucked. But we're going to see what's going to happen here. So selling premium was the move, right? Well, I sold the calls. I sold a call right at close. I made an extra $100 on it. Why pre-recorded? Because that's a good question. Because you're going to see the people who do the pre-recorded ones, it's not really, pre-recording is less chance of error. So Netflix IR. Come on, where is this? When are they going to post it? Let's see. I'm honestly surprised. Why? Why are you surprised they missed? So it's 3 o'clock. I'm going to just keep refreshing the link till it shows up. So again, it's 3 o'clock, but it's not there. And sometimes it takes them a little bit of time. So literally, yeah, it's not up there yet. Haha. Get ready. So we're just going to wait here. I think we're going to be here. We're first. They didn't miss. They removed trials. But here's one thing. So I guess while we're waiting, I think a lot of people, really the big thing was Netflix. If you guys go look in the description of this video. I put all the numbers of what happened. So Q4 December earnings, 30 cents per share. It was 6 cents better than 24 cents is what was expected. Revenues rose 27%. You guys see all that? You guys could go look in there. But pretty much the big issue here, Netflix issued downside guidance for Q1. So we could go over. I want to wait till I'm going to go over this. We're going to go over. They have the whole thing. We could talk about it, but I don't want to miss this conference call. So oh shit. Damn it, my thing just froze. So someone let me know when it's up, but I can't even see now. Hold on. Oh, there it is. It's up. Okay. 1 minute.
Good afternoon and welcome to the Netflix Q4 2018 earnings interview.
So this is just starting now. You could go to that link I put in the chat. They're going to do the introduction. But you can skip through this video. So you guys should go through this. Somebody should go 5, 10, 20 minutes ahead and listen in and put in the chat what happened. And we can listen in real time. But that's what the algos are doing right now. People are listening to the whole thing. They could scrub through the audio transcript. Get ready to watch the stock move. So here.
Maybe give us your perception of why the role intrigued you in terms of moving to Netflix, what your first perceptions are, and some of the things you plan on making a focus for your tenure as the CFO at Netflix.
Sure. Thanks, Eric. Well, first, I'm super excited to be here.
This is after hours.
What attracted me is just what Netflix is trying to build. I've always been attracted to the high-end product quality and ambition, and Netflix has all of that in what we're creating. First impressions, this is day 9, so I haven't been here for long. I'm trying to really immerse myself in the business, do a lot of listening and learning. Really plan to do that for probably the first 60 days or so for sure. And I've already been struck by, first just the level of integration and collaboration across this company, all aspects of the company, combined with speed of decision-making and moving forward has been really unique to see. Also, I've been really impressed with just the team, the quality of the team, not just my direct team, but across the board again, and their passion and commitment to continue to innovate and improve, improving the content offering, elevating the level of and quality of service we deliver to our members, and not just our existing members, but our new members, and really driving that positive flywheel for our members and ultimately for our business. So it's really been great. I've got a lot to learn. I want to thank everyone, all of the folks around the company for being patient and helping me with my onboarding. And really just a quick special shout out to David Wells. He's been unbelievably gracious with his time, with his insights, and I'm sure he'll always bleed Netflix, but I hope for a long time to come he'll be a friend, a colleague, and a resource for me.
Great. Maybe since we are at the end of 1 year and the beginning of another, I'd love to turn to Reed and maybe Reed, ask you to set the table. What were the big learnings of 2018? What were the things that you felt the company really attacked in the marketplace in 2018? And as you look out to 2019 and beyond, what are those big opportunities? What are those big challenges? What are you trying to focus the entire management team around in terms of executing against the plan looking forward for Netflix?
For 20 years, we've been trying to please our members, and it's really the same focus year after year. We've got all these ways to try to figure out which shows work best, which product features work best. We're a learning organization, and it's the same virtuous cycle: improve the service for our members, we grow, that gives us more money to invest. So it's the same things we've always been doing at just greater scale.
Fair enough. Obviously, I think almost every conversation each quarter starts with performance in the business. We saw strong subscribers in the quarter, a strong comment about the way subscribers should continue to start the year in 2019. Throwing it open to the broader team, maybe starting with Reed, but what did you see on the subscriber landscape as you looked out to what the way the business performed in Q4, and what kind of confidence that's giving you in the growth opportunities looking out to early 2019?
When you look at the chart we put in our earnings letter, which has the weekly growth rate, you can just see how steady it is. And we're just continuing to work away on all the things that we've always done. And what's wonderful is the internet entertainment market is just growing. So we're continuing to fulfill a need that we see. And Eric, want to add anything?
And Eric, if I could just add a little bit more color to Reed's comments, I would say the other facet I would highlight is that the strength in paid membership growth was really broad-based geographically. So really thrilled with the progress we're seeing in the international segment. And again, that's not any one single territory or any one single country, but really broad-based. And I think that reflects the global nature of the secular drivers that we have, which is adoption of broadband globally and the adoption of on-demand entertainment globally.
And maybe following up on that, is there anything, and maybe this is for a combination of Reed and Ted, was there anything on the local language front? I know that is a piece that we've talked about on prior earnings videos about how local language content is driving adoption of the product on a global scale. Anything to call out there you saw in the quarter that should portend well for 2019?
I'd say one thing this quarter that's been incredibly exciting, and the things that are playing out, you see the numbers of, you see a big number like Bird Box and these shows are playing incredibly globally. So it's an interesting thing when you can tap into the global zeitgeist with something which gets me very excited about the potential scale of the content business when the world is excited about something. And then on the local language side, shows like Elite that can play very, very strong in their home country, like in Spain.
So yeah, they're going to talk about Bird Box. Like I said, I'm typing in here. I don't want to disturb. You guys let me know. I don't know if you guys want me to chime in. Let me know. I'll type a little bit like this. But what I was going to talk about, again, someone go through. We're going to see as the stock moves. But what I'm trying to explain, this isn't that bad. Look at where the stock is relatively since December, So, think about as far as where the stock is. It's not like this drop is anything crazy that's going to shoot the market down, but it is going to have a negative effect.
Always curious what goes into the thought process around raising price on the service, how confident you are that customers are ready to absorb a higher price for the service when you look out. So maybe, Reed, I could start with your perspective on how you think about pricing the product in the marketplace and what it means for subscriber momentum going forward.
Greg, I'll punt to you.
Sure. I think, the model we've got is a fairly simplistic one where we think our job...
Oh, shit. No, what happened?
...is to effectively invest the money that our subscribers give us every month so that we can give them incredible content and a better and better product experience. And if we do that well, we create more value for our subscribers, and then occasionally we'll come to them and we'll ask for a little bit more money so that we can actually start that next cycle of investment. And so that's the overarching framework. And then, we look at, the engagement levels and a bunch of other things to, try and understand what our pricing should be. And generally we've seen that those are pretty accurate, and the price changes that we've done are rolling out as expected.
Well, I want to follow up with you, Greg.
Dude, what the heck?
On this, because if you look versus a year ago, tremendous level of push on the personalization side in the service, more focus on mobile on the product side as you've looked out over the last 12 months. Were those some of the things you saw that allowed you to see either higher engagement, new use cases emerging along the subscriber base? What did you see in some of those product developments that fed into maybe a pricing discussion?
I would say that I wouldn't tie them so directly. I mean, we're generally trying to think about every way we can make the product experience better for our members around the world. That's mobile changes where we, give them a higher quality experience. We also do things like we give them, previews and the ability to sort of do sort of sampling of content, ahead of time to understand what's coming to the service, as well as, things that you mentioned, like increasing what we think about is more like how do we tell a story about each of the stories. So when we have a new show coming on, how do we effectively communicate what we think is going to be relevant to each of our subscribers in a strong way, so that they can get excited about those shows as well. So
this is a recording. That's why it's not moving. You guys could go through the recording. It's on their YouTube.
Think about it,
but
doing those things so we can increase price.
I'm waiting for them to say something.
Excitement for our members, and if they have a great time, then we'll be able to invest more in content and making more product experience benefits.
Maybe just one more for you, Greg, before moving on. One of the things we noticed in the quarter was Netflix moved up the app download charts with respect to mobile.
Well, no, you got to give it time.
In the iOS
it's a 30-minute video, 34-minute. In the next, I give it 10, 15 minutes, the stock is going to start moving. That's the thing. It's going to literally, it's going to come in here and it's going to, that's why I said scrub it. Some of you should start listening to the video 75% way through, and you'll see what gets said.
To just the general relevance that the application has, and as you see us sort of accelerate in terms of subscriber additions, and more members around the world using the service, those members are using it on mobile in large part as well, and so we just see an increased rate of download. That's what we think is happening there.
Okay, Ted, following up on what Greg just said there, with the price increase going through, and there's been other jurisdictions when you put price increases through, and talking around similar frameworks to margins and free cash flow than you had talked about previously, I think the natural conclusion some of us have is the incremental investment dollar is going into content. So Ted, help us understand what is an incremental dollar that's being generated by the business going into on the content side, and how should we think about content investments in 2019 versus 2018?
I think Reed said it right. It's more of the same, but on a continued larger scale. Okay. So the level of investment that we're doing in our original film space, it definitely changes the economics in terms of licensing films in later windows versus producing films, which is a more kind of front-loaded cash activity, but has a much better payback for us. And when you have something like Bird Box, the ability to invest in the next one is just all the greater. And I think in local language and content investments, continuing to improve the markets that are emerging for us, both in the markets that scale around everyone kind of likes some of the same things, and other markets that are more unique content tastes, like in Korea and Japan and India, where we're able to be much more fine-tuned about what we're offering those markets as well.
And Eric, just to add on, specifically to narrowly answer your question on content spend for 2019, we're not giving individual expense line item guidance, but I will say that it was $7.5 billion in content amortization in 2018, and I think you can obviously expect that to grow. And the trajectory should be pretty similar, but the other thing to bear in mind is that we've also committed to growing the operating margin as well in 2019 by about 300 basis points year over year to 13%. So those will work together. So you'll see improved margin, but also higher content spend as well.
And we do see that payback, Eric, in as Greg mentioned earlier, in increased engagement. So, which again, continuing the virtuous cycle where you've got the more investment you're putting in, the more people are finding content that they love, and the more they have value in the service.
Well, speaking to higher engagement, I think in reading the release,
that's good. Gambling degenerate. See, he said at 20 minutes. See, somebody should go skip through. Someone go to 25 minutes, and someone listen at 30 minutes. He said they talk about the price increase, so that's good. So again, you might see the market move in 5 minutes off that.
Quantitative commentary in this shareholder letter around engagement and viewership around key pieces of property.
I would look at it like these are less financial metrics as they are cultural metric. So what does it mean when 80 million households are watch Bird Box?
What?
Well, culturally, it means exactly the same thing as 80 million plus people buying a movie ticket to seeing it, or 80 million households watching a TV show. And so culturally, it's meaningfully out there. People are talking about it, tweeting about it, posting about it, challenging each other to do different things, which we want people to be very careful when they do. But what's important is that for part of your Netflix subscription, you're in the zeitgeist. You're watching the programming that the rest of the world is loving at the same time. So that's so we gave you some numbers out to give you some sense of the scale and the scope of it. I think it's important for artists to understand.
What's up, Chad Kelly?
The audience also understand the size of the reach of their work. So that's why you'll see us ramping up.
This is Netflix Live. This is after hours. This is what.
And then
So
Eric,
it's not moving
we
too
also
much.
included this analysis of the total TV entertainment market in the United States, just to point out how large a market.
Oh my God! Fuck.
Of the reach of their work. So that's why you'll see us ramping up a little bit more and more and sharing a little more of that information.
And then Eric, we also included this analysis of the total TV entertainment market in the United States, just to point out how large a market that is. About $1 billion
it's dropping.
A day.
So what's being said at this point?
Again, gaming platforms, linear, DVD, Netflix.
So I'm putting this up so you can kind of see the orders,
and we're
so it's not too
running
laggy.
about 10% of that. So it's just a very large and fragmented market. There's an incredible set of broad uses. And we did it on television because television is 100% entertainment time, whereas mobile phones and laptops are some percent entertainment and some percent work and communication activities. That's just to set some broad context. In other nations,
no, they're talking about the foreign impact. So listen,
less penetrated,
because this is their future growth.
Mark for us.
Eric, I also think it's a good data point around the fact that we are growing the entertainment business. So the idea that it's good for the industry to know, it's good for the creative community to know, it's good for fans to know that we're, at a time when we're growing big audience films like that, the box office, by way of example, the North American box office has grown in the fourth quarter. So, and in fact, had some records. So I think it's a very exciting time, and we thought it'd be a good idea to give you some idea of the scale of that and how to put it in context.
No doubt driven by the theatrical editions of Roma.
Yes, yes.
Maybe going back to the product side, and Greg, when you hear about the engagement you're seeing and the content success of the platform, help us understand a little bit of how the product might evolve. I mean, I think one of the most unique things in the quarter was the interactivity of the Black Mirror product. Would love to talk about both the product side within Netflix and then on the content creation side as Ted talks to content partners about how that interactivity is something new, interesting, and might spur engagement, product development, and content relationships.
Yeah, I think it's a great example of us trying to take, a technical capability and the flexibility of our distribution.
I want to see if he
platform,
talks about the lawsuit.
We use those things to innovate on storytelling and the storytelling format. And it's, super exciting to be able to do that in a way which, to your point, drives more engagement. We're definitely seeing that with Black Mirror and Bandersnatch, but also sort of extends the palette and the portfolio, the tool set that the storytellers that we're going to be working with, in the years to come have to tell their stories in the most compelling way. So been super excited about it. And, you should anticipate we'll do more of those as we start to explore that format. And I'll turn over to Ted to talk about from a content perspective.
Yeah, I would just say there's been a few false starts on interactive storytelling in the last couple of decades, and I would tell you that this one has got storytellers salivating about the possibilities. So we've been talking to a lot of folks about it, and we're trying to figure it out too. Meaning, is it novel? Does it fit so perfectly in the Black Mirror world that it isn't a great indicator for how to do it? But we've got a hunch that it works across all kinds of storytelling, and some of the greatest storytellers in the world are excited to dig into it. To give you some sense, that's over 5 hours of content that's produced for that episode for people to choose their own paths, and there's countless ways that they could go and end up with, and that is an incredible challenge and a hugely exciting thing that differentiates Netflix for creators.
And I think in that challenge is also an opportunity, right? It's an opportunity to bring technology to bear to create a tool set for creators to make that process easier and more effective.
Right.
Eric, there is one piece of data that didn't make the release, and that's what percentage of people chose Frosties
Why is he
versus Sugar Puffs.
Oh.
And the answer is 73% for Frosties.
That's the level of data transparency we've not seen in our content yet. So it's a critical
That's
data
so
point
funny.
of the quarter.
Completely anecdotal, but the Sheridan House picked Frosties multiple times.
Thanks, guys.
So we fed into those numbers, my wife and I. Let's bring it all together now that we've talked a little bit about a price increase, subscriber trends, how money gets reinvested back into content. Spence, I'd love to turn to you and say, when you think about the free cash flow profile of the business, some of the commentary in the letter around improving free cash flow.
Peace out, Mark. Sorry, I'm just looking at the thing.
How do you think about
I gotta go look at the chat, but
the approach the business has always taken to the capital markets? Any perspective you have
This is important.
that you think might be different than in the past, or do you think it's going to be steady as it goes? How are you thinking about sort of the funding and the capital structure side of the equation, albeit new to the role?
Sure. So, well, first, we feel great about our content investment. It really is investment that is, as we talked about those viewing numbers and characteristics, that speaks to some degree the return on those content investments, the return on that capital. We feel really good about that, as obviously the move to more owned content and production has pulled forward some of that spend relative to the former operating model, the predominantly licensed model, so that has put pressure on the cash flows of the business and cash needs of the business over the past few years. But what you saw in the letter is that the negative cash flow in the business of roughly $3 billion in 2018, we're predicting sort of similar levels in 2019, and then to meaningfully improve that trajectory going forward. So that comes with driving the subscribers in the business, driving the revenues, driving the scaling the margins in the business, as we've committed to, from just 4% a couple of years ago to 10% last year, and committing to 13% operating margins in 2019 and beyond. So this is a business with characteristics that certainly allow for very healthy operating margins going forward. You can look at almost any benchmark of a comparable type of company. And so we feel very good about the operating leverage in the business long term. Ultimately, turning that into a much more positive contributor and conversion into cash flow, and ultimately our aspiration is to be self-funding, and we believe we will do that over time with these content investments. In the interim, as we continue to need to access the markets, I don't foresee any change to our approach. We've talked about the fact that we've accessed the debt markets to do that, and we'll continue to do so. We think that is the optimal cost of financing and funding to date, and we'll continue to pursue that path.
Great. Two back on the price increase and the subscriber forecast for Q1. Just want to make sure there's a clarification point. Number one, in the shareholder letter, you talk about the price increase going into effect during Q1 and Q2. If I remember correctly, the last time there was a price increase, it went into effect over a 12-month period. Maybe just to understand a little bit, what the mechanics are of the price increase, so people can understand some of the decision process behind that, maybe how it flows through the numbers in the first half of 2019.
Sure, I can take that, Eric. So with respect to the price changes, in the U.S., the new pricing goes into effect for new members. Existing members will be phased in over the next several months. So you'll see that impact over the course of the year. And what that means is that will obviously impact the rate of net addition growth in the first half of the year. But commensurately, you also see ASP domestically improve over the course of the year. And that's what we think will drive acceleration in revenue growth over the course of 2019, and that's what will also, we believe, drive operating margin higher sequentially over the course of the year to enable us to hit that 13% target for the full year.
Maybe one follow-up that came through from investors just thinking through the price increase as it was reported in or speculated in the press over the last couple of days was how it might inform forward subscriber guidance. It looks like you're talking about U.S. paid net additions at a pretty similar level in Q1 versus Q4, and yet you are putting a price increase in place. The last time you did that, there was a fair bit of conservatism in the forward guide. How should we reconcile maybe the framework for guidance versus the price increase going into the marketplace? How should investors interpret that?
Sure, Eric. I would say there's no change in terms of the guidance philosophy. And as we write every quarter, our approach
Obama's
is to
doing
strive for
conflict on
accuracy
Netflix.
in our guidance forecast. And to do that, we take into account all the known variables that we're aware of when we set guidance. So really, it is our best guess, and we're not by design trying to be overly conservative or overly aggressive, and we're really trying to be accurate with it. So that's the color I provide you with respect to that question.
Yeah, that's interesting.
2018, which we talked about in the last interview,
He said
the
that
topic through the year.
the
Was the
guidance.
year you framed as a company of.
He asked if their guide. He pretty much asked if they were sandbagging their guidance. So someone remind me about that. We'll talk about that.
Pivoting more towards spending money on the marketing side against your brand, individual pieces of content. What did you, as a company, learn this year as you went through that process about the way to allocate marketing dollars on a global scale to arrive at the most optimum outcome of subscriber additions, promoting brand, promoting content, driving engagement, and how should we apply those lessons as we think out to the way marketing might be sort of traject through 2019 and beyond?
Almost all of our investments are around promoting these incredible new titles we have, like Bird Box. So that's our primary focus, at least on the paid marketing side. On the earned media side, it's broad. And then we have some straight acquisition targeted marketing that we also spend. But the bulk of it is around promoting the incredible new titles and getting them broadly launched.
Are you uploading this? Yes.
Great. Greg, maybe
we're gonna talk about this. Don't worry. I want you guys to listen and take questions on this too. Take notes at different times. We're gonna come up. We're gonna go over this. I'm trying to listen to this too.
Where you struck a lot of partnerships to help on the distribution front. Love to start with Greg. Would love to have anyone chime in that feels they should on what some of those partnerships brought to the platform in 2018. How you think some of those partnerships are set up to aid platform awareness and distribution in 2019 and beyond, and how you think about the scalability for more of those partnerships when you look out over the next couple of years.
Sure, and I think someone's been here for a decade plus. It's sort of pulling that long thread of increasingly using partners in different ways to promote the service and to make it easy for members to sign up. So we've been doing partners for a long time, and it's sort of been this march from integration on devices and just make that a point to engage with the service to doing things like billing on behalf of, or we do billing integration, and now the latest sort of iteration that we're working with is this bundling model, right? And so we're early on in that process, but I would say we're quite excited by the results that we're seeing. And I think mostly it's because we believe it allows us to access a segment of consumers who are big entertainment fans, but maybe they're not as sort of technology forward or early adopters. And so they haven't signed up with us directly. And so by putting Netflix on a set-top box, which they're using to access a bunch of other video content, and by including the Netflix subscription in a package of either their mobile subscription or pay TV subscription, we can make it just super simple for those folks to get to know Netflix and to enjoy the kind of big shows that we're seeing like Bird Box, etc. So I would anticipate
was a sandbag.
We rolled out Sky and Free in Europe this quarter, and we've got more to come. But also worth noting that we're going to grow that segment of the business, but it's small in terms of acquisition impact. It's a nice supplemental channel, but it's small relative to the total organic subscriber acquisition that we have.
Well, you guys, Bird Box.
Your last question, Eric.
We'll talk about Bird Box.
Partners turn out to be great promoters of our content brands
that
as well.
Bang.
And maybe one follow-up, when you do those partnerships, has there been one avenue that's moved the needle more than another, whether it's in the home broadband space, partnering with infrastructure companies, or on the mobile telephony front and promoting mobile usage and mobile engagement on the platform, or have you seen roughly similar results irrespective of the type of partner?
I would say every market is different and every partner is different in terms of, their goals and what their, the message that they're communicating to their subscribers and how we can link that message with what's the Netflix message as well. But, so nothing stands out thematically or sort of a general trend that I would say, but each one is incremental. And so we look to do more of all kinds.
Maybe going back to the shareholder letter, one phrase in the shareholder letter that, Ted, I wanted to ask you about.
I got my
phrase
bang.
less focused on
Shit.
second run programming. I think one of the big investor debates and questions around Netflix becomes what happens to licensed content that may come off the platform in 2019 and beyond, how you plan for that content coming off the platform, what it means for investments, what it means for engagement. Maybe reflect upon that statement in the shareholder letter and how it informs maybe the mix shift or the planning process for content as you look out to 2019 and beyond.
Well, most of those licensing deals are multi-year, so it gets caught up in our long-term content commitments. That's all part of that content. Remember, our early investment in doing original content about 6 years ago was betting that this, there would come a day when the studios and networks may opt not to license us content in favor of maybe creating their own services, which was that's a corner that I'm glad we saw around a few years ago. And today, I'd say the vast majority of the content that's watched on Netflix are our original content brands. We do license a lot of second-run content, and in that, we have a lot of episodes. So we have shows like Grey's Anatomy or Friends. We have hundreds of episodes. It's a lot of hours of watching. But that if you stack all that viewing into kind of like a top 50 or a top 25 most watched shows by seasons or by series, it's dominated primarily by our original content brands. We are still a buyer in that second run market. We're both a pre-buyer, meaning buying it before the shows come out, and sometimes an aftermarket buyer. But it really is up to the sellers whether or not they want to continue to sell.
And adding to Ted's comments, the top brands that we have being originals like Bird Box are phenomenal. And in unscripted now, it's our first category where a majority of the viewing is branded original. In the other categories, we're climbing, not yet at a majority, but on track for it.
And 2 years ago, we didn't have any original unscripted content at all. So that's how fast that those moves can take place.
And Eric, we've also said we're not overly dependent on any one single piece of content as well.
There's like 6 more minutes left. We got a lot to talk about. You guys are already getting pissed off.
Right. And as Ted mentioned, all these license deals are staggered and sort of waterfall in over a period of time. So there's no sort of cliff there.
Waterfall and cliff, right?
I'm on a roll.
Go on.
Take a shot every time they say Bird Box.
One more piece on the content side. One question that came into me as the moderator this quarter in a couple of different ways was how to think about ownership of content versus co-production of content, what the right mix shift of that is, medium to longer term, what some of the pros or cons are of the approach of either
I don't laugh at anybody's bad jokes.
outright ownership, and how we should think about that developing over the next few years.
Well, the one thing is our main goal is to make the best content. And we've said in previous quarters that is a combination of several different business models, depending on who owns the IP. So what we're going to do is make the best show and not be stuck on the business model because the consumer really doesn't understand that or even want to spend any time thinking about it. So like by way of example, last year, we had 140 different shows around the world that premiered on a network somewhere and on Netflix everywhere else in the world. And next year, it's more closer to 180. And these are a combination of co-producing with local producers in other countries, shows that then air on a network in that country and then premiere on Netflix. But when I say co-production, I mean we come in at the script stage, we come in at the first money stage, we're involved creatively with the production of that show. Bodyguard is a good example of that, that we produced with ITV, that the BBC premiered in the UK, and then at the same time, we released it on Netflix around the world. And we produced it together at the script stage. We're involved in the production of that show. And outside of the UK, it is a Netflix original show. And in the UK, we follow a broadcast window from the BBC. And again, we've had a great success with the show around the world. One additional data point, we have over 23 million households have watched Bodyguard on Netflix in the first 4 weeks. And it's a good example of taking a show from anywhere in the world to the rest of the world. And we do other ones where we buy territories. There used to be a tradition in television where the network would make one show and then they take it to the May screenings and try to sell market after market after market. That's less and less the case. while we're working with producers and networks now to pre-buy or co-produce for the rest of the world. A similar evolution to the old studio film business, where the studios used to carry the international rights until
look at you guys like the movies. You're like, all right, it's good. I ain't gonna lie, we like this old shit.
Eric, I think we have time for one more question, please.
Last question. Let's hear what they have to say.
And maybe turning it back to Reed, I think one of the more interesting sections in the shareholder letter, Reed, was you talked about the competitive landscape. Big question, big debate. We get a lot from investors. You talked about, in a lot of ways, all ships rising.
Politics.
Talk a little bit about the landscape. What do you see out there
politics,
on the landscape to attract user attention, user engagement, monetization, attract content creators, and how you think that competitive landscape will evolve, and how you think about navigating it from not only just 2019, but for the longer term, Reed?
Let's see what Reed has to say.
All ships rising is a little Pollyanna optimistic. I think about it really as us winning time away, entertainment time from other activities. So instead of doing Xbox or Fortnite or YouTube or HBO or a long list, we want to win and provide a better experience, no advertising, on demand, incredible content. And so when you think of I'll just do US terms as an example, there's 1 billion hours of television content being consumed a day. We're winning about 10% of it. And so that's why, like Disney, they have great content. We're excited for their launch. And, maybe they grow over a couple of years to 50 million hours a day. But that's out of the billion. And so, we compete so broadly with all of these different providers that any one provider entering, only makes a difference on the margin. And so, again, that's why we don't get so focused on any one competitor and really think
that's a good point.
Way is to win more time by having the best experiences, all the things we do, and that's helped us a lot. Another thing that's helped us a lot is having David Wells as our CFO for the last 10 years. It's been an incredible, joyous partnership. And so
they've had a new CFO.
I'm going to turn it over to David Wells to come say goodbye.
The CFO's leaving. Okay, so that's it. He's going to call it. I'm going to call it there. We're going to go over what we said. There is a lot of things that happen there. So first, before we do that, what you guys need to do is like the video or go on with your daily efforts and work. I'm going to post a link. You guys have to go comment on this guy's picture and tell him to sponsor or join the cult. I think it'll be funny. But now let's talk about Netflix. So you guys were talking about the movies. Do you guys want to go over the report? We could start with going over the numbers. We could start with some of why Bird Box is so important, if you guys want to talk about, because I was reading your guys' comments, and you guys were kind of pissing me off with it, man, because you guys were like, come on. You guys were going on a lot of stuff with it. So we could talk about I think we should talk about Bird Box. You guys were going off on Bird Box. I think we need to discuss that. Or lastly, we talk about some of the main points. They talked about currency translation. They talked about competition. And even then, just the big part, the sandbagging. I think I'm going to start there, actually. I think we should start with the sandbagging because one big part that happened here is that they dropped because they dropped their guidance. So again, if you guys go to the description in this video, I put all the metrics for the earnings. Again, they did 30 cents per share instead of 24 cents was expected. So they dropped on revenue. They lowered their subs, or I think they beat the subs, but then they removed the trials. But now the biggest issue, was they reported and issued downside guidance for next quarter. So I would look at the conference call's over. Maybe the CFO said something, but I think we were a little behind anyways. So it's kind of interesting. The call was recorded. We're going to see the move happen tomorrow. I think that's going to be the number one thing. Progressive social. That's funny. But Bird Box, you guys keep distracting me with that Bird Box shit. But what was I saying before that? Where were we at? What were we talking with Netflix? I just blanked on it really hardcore. Oh, the guidance. Yes, the big difference is they guided for next quarter. So you guys have seen... yes, we're going to talk sandbagging guidance. That's the number one things here. You guys saw what they did last, all the companies like Apple, Skyworks, when you've seen the recent downside guidance, they've all been talking about this quarter and then gave indications for next quarter. who's talking at me? So what's going on here is that they already reported they had a good quarter, it seems, for fourth quarter, but they said coming into this next 3 months, they're not going to do good. So a sandbag. Someone asked, what is a sandbag? A sandbag is a term when you pretty much you miss something on purpose. It's like if I wanted to beat you guys at the push-ups, right? It's like if I did a bet with you guys on push-ups and I went on here and I was like, I did like 10 push-ups and I made it look like I was struggling to do 10. You'd be like, oh, Josh answers doesn't know how to lift. And I was like, all right, I'll bet you $100 I can't do 100 push-ups. You're like, easy, you suck. I sandbagged it. It's like, or have you guys seen the movie White Man Can't Jump? That's a sandbag. It's a hustle. It's a hustle, but it's where they set low expectations so that they can beat them, essentially. So it's easy for them to get ahead with that. You know, no, there's not. That's funny, but that's what happened. That's what we're pretty much talking about. Clinton Benghazi trial. What? But pretty much what's going on here. Netflix issued downside guidance for the next quarter, but now on the conference call that we just listened to, I don't know if you guys caught it. They were talking about it. He said the guidance. He said we could hit it. We might hit it. We might not hit it. I don't know. So they've pretty much said that it was just a number, but it's not really too accurate, which I think is interesting because I believe in the past, I would want to go compare. If you guys would like to, you guys could go and see what they said last time. They're going to hit it? What do you mean? Damn, Netflix cracked into the 11 now? What? What are you guys talking about? But, yeah. Josh, any thoughts on Davos trip being canceled after Netflix stuff? Wait, what? I don't know how Netflix and Davos had anything to do. Well, you guys chill, man. Don't worry. I think tomorrow is going to happen. The conference call's over. I guess even then, they didn't say anything. That conference call was very boring. They didn't talk about much. They brought up the issues. A lot of you guys were like, why is Bird Box so important? Everybody, do you guys understand Bird Box is important, okay? I'm sorry. I don't even like it. I watched it. I thought it was a fucking weird movie. But from a business perspective, you guys got to understand it's good. And I said that in the chat, but someone did bring up a very valid point. If you make a lot of money on this content and it's not attracting people and it's not bringing in the money, money in versus money out, that's a shitty business. But that is how film operates as a business. You guys got to realize these guys go to hit one film. They spend a lot of money because if you hit one good, successful film, it could be amazing. You could get the money. But now, too, think about what Netflix goes for. This is the stupidest thing I think Netflix does, but it makes sense. Have you guys noticed how it's literally a crapshoot, 100%. It's like options. You can make 10 movies and you only need to hit one of them to recoup the cost. It's like private equity. That's why it is. They do financing. They do financing for movies. They raise investments. Next time I get a movie, I'll send you guys. I'll see if they let me post it. I have to redact some stuff. I'll show you guys a movie investment. It's a pitch deck and it's a offering prospectus, just like a normal investment, but it's for a movie. And that's what I'm saying. So, but the content they go for, now think this is Netflix's strategy. I think it's dumb. They always talk about, we got Grammy or Emmys, yada, yada, yada. They're thinking whatever it is, right? But when they win those Emmys, it gives them an intangible asset. It brings talent to the platform. People want to go to that. Netflix has become a name in LA, realistically. I think what they're trying to do is they're wasting all this money. The cash flow burn is stupid. It's like Tesla, but they're doing it in the hopes of if you hit a couple of these good platforms, these titles, they're able to start competing again. And like they're even saying, they said on the conference call, the biggest part, that's what I thought was interesting. He said the biggest part about competition is that no one competition is going to move it. Essentially, they're saying that if somebody, if Disney comes in here or that, Netflix is so spread out, they said, and I don't know if I believe that. I don't think I agree with that. However, it's a valid point, I would say. But brought the government with Obama. That's crazy. But it's going to be, all around, it's interesting. But you guys see how some of these factors come into play. But the 80 million people Bird Box drew, it's a good thing. They are talking about it. Now, it's a highlight. But what can we, one thing that you guys could question is, hey, it didn't bring us, not only that, it didn't get us the we can't attribute an exact number for how many people signed up because of it. That's it, you know, because a few months ago, you know, here's the thing. You guys are complaining about Bird Box. Bird Box was great. I think as an investor, 80 million people doing anything is great. If you guys could get any title to draw 80 million people to do something, that's money. You know, it's either attracted people. Even now people know about Netflix. You guys saw it. You all know what the meme is and everything. It's worth some value that they should be able to monetize. Again, a lot of hypothetical there. However, it doesn't change the fact that we don't know how many people got on because of it. That's the thing. You know, I agree. Lack of information is very negative. It's still just, we still don't even know why we can't attribute a direct, okay, people signed up because of this, and that is what we need. Because it's crap. No, it's not crap. I don't know. I think they're signing people well, but here's what I'm saying. The thing that I don't like is that Bird Box is the only thing they're talking about. If Bird Box is your only highlight, Bird Box isn't bad, but that's their only highlight. If they had, if they had more subscriber additions, if they had more viewership in India, if they had other titles, they would talk about that. But all they did talk about was the title that hit. The title cost money. Title didn't necessarily bring in revenue, but it got a lot of social attention. So that's about it. But only highlight, yeah, exactly. There's just not much going. I agree with that's where I'm saying. But Bird Box wasn't bad. I don't think Bird Box was bad. The bad part is all they had to talk about was Bird Box. You know, compare that to any of their past earnings. They actually had shit to say. I strongly agree. You know, so it's different. What would the call been about if Bird Box wasn't there? I don't know. It would have been very negative. It would have been oh my God. That would have been, actually, that's a fucked up question. That would have been the worst phone call ever, actually. Now that I think about that, if Bird Box wasn't there, see, well, that's what I'm saying. I said it's sad they didn't talk about it, but I'm like, damn, if they didn't even bring up Bird Box, oh my gosh, man. That would be back down to 13, because investors realize that there's nothing to talk about. But yeah, so there's that. Do you think this will go well with the 265? We will see. They had nothing to talk about positive. They had stuff negative. They had foreign currency to talk about. They had the lawsuit to talk about with the interactive stuff. They brought a Bandersnatch, but that's the thing. I noticed they didn't talk about it in depth. They brought about it very, very basic, but that's it. Bird Box is just U.S. Damn, that sucks. Bandersnatch? Media exposure, not good movie, but equally equivalent. Again, yeah, the exposure, again, 80 million people to watch in that. It's just their metrics, investors, you know, people are using it. You're getting people on your platform. You just familiarized 80 million people with your shit. That's great. But yeah. All right, man, you guys dipping on me? Make sure, everybody, if you're in here, make sure you guys are subscribed if you're new so you don't miss this stuff. And so we see you on the stream tomorrow morning. You can listen to my squeaky chair. Like this video, man. There's like 200 of you. I don't even know how many people like this video. You guys got to like this. Show some love. Tell me you love me. What else we got? I could go over the earnings at that. My puts are too high. I love you. Walter Mercado. Will it drop or go up? I think it might go. I think it could go down more, because this is what I was saying during the meeting that a lot of people were missing out on, is like, yeah, this is bad, but not that bad. Like, people are like, is it going to make the market gap up or gap down? Look at how far off we are since the beginning of the year. It's almost up $100 even after this drop. It's up $80. So take a look comparing it to the SPY. Like, it could come down a lot more before it starts to affect the SPY. That's why you guys got to realize, a lot of you think Netflix might be like it is tech. It has to do with the NASDAQ, and it's important, and we could see how much of the Qs are weighted by it. But at the end of the day, Netflix is $148 billion. I guess it's decently sized, but it's really not that big if you think about it. I know, and that's kind of crazy to say, right? But give you guys some perspective. Okay, this is good. Bird virus is real. Whoa. Under the recent gain. Can I golf? No, I cannot golf, man. They just said interactive, sir. They said interactive. They compared it with some stuff, but That's the same market cap as Jewel. Yeah, that's crazy. That's crazy. It could be the starter. We won't know until later. It could. I think so. I think this could be the first start, and we could see what happens. However, that is the thing. I think the reaction could be muted. Honestly, that call wasn't good in my opinion. It was boring. It was light. The numbers were decent, but they got more people. This was just a very lukewarm earnings. I think the Bird Box was. I don't know. I think Netflix kind of reminds me of Bird Box in a way. How many of you saw Bird Box? Because the Netflix stock kind of, I feel like this is just that weird, awkward time in the world where, like, you know, I feel like we're just discovering that if you look outside, you die. Because that's what it kind of seems like. It's just kind of slowly catching on. This is weird. This is kind of no one. I saw it. I did. Fuck you guys. I watched that shit. I put it on the background. Yeah, man. What do you mean, black and... Yeah, come on, look at you guys. You guys are like, I didn't watch that shit. Fuck, why would I watch that? The movie was so fucking good. Y'all just haters. Y'all telling me, come on. You telling me one chick didn't send you that meme and you had to pretend? Man, get the fuck out of it. You all watched that. You all watched that. You lying ass motherfuckers. You guys bought puts. These guys fucking, they think they got puts. They can't watch a movie just because they bought puts on Netflix. It's all cool, you guys. That's cool. Yeah, I know you guys are committed, but your subscription isn't gonna matter, man. There's 80 million people. You see what I'm saying? Yeah. Oh my gosh, jeez, that's Jason Fun, fucking weirdo, dude. Jason Fun. Hey, do you know anybody who could get who at car dealerships in San Francisco? I'm trying to get a car, and I might come up to San Francisco to pick it up, but they're being dicks with me. And maybe you might be able to help me out. Anybody in the car industry? Anybody in here in the car industry that could help me out while we're on this topic? It's a little off topic. I just need some assistance with this. Watch 700 Club instead. Aw. Land of dicks. I know I hate it. I haven't watched 700 Club in a while, man. You should watch it, though. You should. And okay. Well, all right, no one's in it. We won't get into too much. It was weird, but... Again, back into it. I'm putting that out there. But, yeah, do you guys, I don't know, though. This Netflix stock, it looks weird. It feels weird. This could be the start of a drop, honestly, because the quarter one guidance was bad. It sounded like a sandbag, but I don't know. I think they left it very vague. So that's what they talked about during the call. They said that they don't know if the estimate, the estimate could change is what they said. However, I think they're leaving it open for interpretation because it could be bad. This was a lukewarm quarter. I think right now the markets are in a weird... I think the market's waiting for more developments. So once we get more liquidity coming in the market, you guys get prepared. This is an interesting time, an interesting thing we're watching here. 2% is nothing. This is already nothing on the stock. I think it's going to... I think this is a very muted Again... when a stock does, you guys have to realize any assets moving up, like unless it's like a complete collapse, there's just some weird shit going on, and price discovery is going to be had here. So it's interesting, but it's hard to say. Just because the price hasn't moved, I'm viewing this as just the data. I think as a data point, and that's what we could see. We could pull up here on the Nasdaq. This is simply. Look at what we're going into now. This is what they're saying. So quarter one, and this is what I'm saying. Fundamentally, it's slowing down. Again, do you guys not see this? End of quarter 7. This same quarter 17, they were growing at 32%. Now they're at 27%, and that's the damn. Whoa, damn. Wait, no. So got to compare to see. And now here's your problem. You'll notice Q17 even into 2018. So 2018 sucked. And they went from 32% growth to 40% growth. That's just revenue too. So that's one thing. I'm only looking at revenue, and that. Oh, see their margins though. That's they're expecting good. This is interesting. They should grow on January, but the revenue growth is really, really slow. Operating income. Why is it so bad? This is traditionally bad for them. Forecast. So this is what you're comparing it to last year. I wish we could go back more in time, but 10%. Q19 forecast. I'm eating at Popeyes tonight? Yeah, let's go. What are you guys saying? Yeah. But this will be under 200 months. I think we'll go. I want to go over this a lot, but actually, I think I might just wrap it up here. I need to go to the gym. I think we might just save this for tomorrow or I want you guys to do this. This is your guys' job because I want to go through some of this, but we just have to wait. I don't want to read right now. I've been in front of this computer all day. I'm about to go put up 225. Okay, buddy. Oh yeah, wait. Everybody do it. Come on. Seriously. You guys. Let's just get me a sponsor, man. Come on. Go comment on the picture and just tell them that, here, look, I'm drinking it. I want to get paid for drinking this shit, guys. You guys got to, here, come on. We can do push-ups. You guys want to do my pre-workout with me? I can do my pre-workout right now. I feel bad for whoever's going to watch this replay at the end. Because you guys realize how we went 0 to 60 so fast right there? We just switched from like Netflix earnings to like I'm about to just throw fucking a Bang energy drink on the screen. Oh, go comment on it. Sip some lean. Jesus Christ, bro. Oh, come on. I don't know if y'all see. I gotta. Oh, you guys see me? Yeah, you gotta. Let's go, bro. Let's go. Wait. Did you guys do it? Hold on. Go comment on it. Just tell him. Say TTF. He's gonna do it. He's down. But yeah, I gotta chug these and I'm gonna go to the workout. Jim Duggan. What you talking about, man? What's up, baby? What's up, baby? The Warriors? What's wrong with the Warriors? Send me some drinks. But alright, y'all gotta do that for me. I love you. I looked at they make me do 2 events a month? You gotta pay me a lot of money for 2 events a month, man. What the fuck? All right, guys, make sure you are all here tomorrow morning, 6 a.m. Subscribe. Tomorrow's going to be great. Comment on that guy's picture. Go tell a friend. I just love you guys. If you know anybody in the car, anybody got a car plug, hit me up, all right? I love you all. Peace. What, Walter? I'm waiting, Walter. I'm waiting for you, Walter. What do you want? What, Walter? Hurry, Walter. Wait, what, Walter? Walter, I'm fucking waiting, Walter. Come on. Hurry. Walter, what the fuck? Dude. Fucking Walter, dude. Tomorrow? Were you saying tomorrow? Sorry. Walter, I'm sitting here, Walter. Now I'm just here, man. Oh my god, Walter. Well, in the meantime, everybody, go comment on that while we're waiting. Subscribe, like the video. Walter. Damn it, Walter. You guys. That's so funny. There's like literally like 100 fucking people. Yo, come on. Can you just do that? If you guys do that on that guy's photo, we're going to get sponsored. Just do that. All right, man. Walter, I'm going to see you tomorrow morning. Okay? What? Get going. That's funny. Well, dude, you guys are done. All right, peace out, yo.